$71 per ounce. That is where silver landed at the time of this recording. In this live stream, I'm going to show you how this slide, beginning at $89 and coming down to $71, it exposes where buyers stopped stepping in, where sellers took control, and why that matters to the next move. Then I'm going to break down how the move in rates, the pressure from rising federal interest costs, and the speed of this sell-off fits all together. And stay with me to the end of this live stream, because I'm going to explain to you how silver may have noticed a bigger macro shift before many stackers did. Almost nobody's noticed that while silver was dropping and dropping toward the low 70s, the U.S. had just crossed $39 trillion in total public debt. $39 trillion. And Treasury interest costs had already reached $520 billion through the first 5 months of 2026. Check this out. If you're interested in silver, click that link in the description. Money Metals is holding this contest. They're giving away 20 Silver Eagles. Every month they hold this contest. I put a link down below. Click that link. Be the next winner on that list and take home 20 Silver Eagles. Now, check this part out because it's really important. This is a massive amount of debt that we're dealing with. 39 trillion. There's so many digits in that. It's just impossible to read all the digits. That's only 150 days after the country crossed the 38 trillion level on October 21st. That's how fast and rapid this is rolling. This also points out that Treasury paid $93 billion in interest in February alone. That's just interest. $93 billion. And that net interest, it's run ahead of natural defense, Medicare, through the first 5 months of this year. Here's what this means in plain English, and for you and I, silver stackers. Oh, I need to take a brief pause. My analytics show me that most of you watching this live stream, you've not yet subscribed to this channel. Please take a brief moment, just click that subscribe button. It's the greatest help you can do to grow this channel and get this information out there. It takes 2 seconds, just hit that subscribe button. Now, here's what this means. It means that the government is spending an enormous amount of money that they're carrying just won't allow this to continue in any way. When this kind of burden grows while the Federal Reserve keeps rates at 3.5 to 3 3/4, like we just heard that announcement yesterday, and the 10-year Treasury yield sits around 4.25%, silver doesn't need a headline that says, buy silver now. No, this is very clear. We only need to see that the borrowing remains heavy and that interest costs are rising and long-term yields are refusing to fall enough to give the system any kind of relief. That's the background for why silver can suddenly move hard in either direction, because the metal sits right in the middle of inflation fear. It sits in the middle of rate pressure and fading confidence, really, in the fiat currency that we use. I mean, this debt it feels like it's never ending. There's never, this is my personal opinion, I'm not giving you financial advice, but there's never been a smarter time for me to swap fiat currency out for tangible, real wealth. That's what got me into silver stacking. I know many of you old school silver stackers, you didn't jump into silver because you heard this buzz about a metal that was once inexpensive and now the value has shot up. No, we got into silver stacking because we know the value of this dollar is always decreasing. I think from when we got off the gold standard, since then it's decreased like 90%. I mean, it's some enormous amount. I don't have the statistics memorized, but the value of the dollar is always decreasing. And the value of precious metals gives you a smart hedge against inflation, yes, but as we've seen and experienced the past 3 months, 4 months, people are really making serious money off this. So as this debt really just balloons and balloons, the idea of silver stacking becomes, for me, just so clear and really so smart. Now, at the top of this video, I told you I was going to show you how this slide from $89, just as I was saying how the value of silver is increasing, now I'm going to tell you how it's dropped. Well, we have corrections. We have profit taking. That's what hits the price. So when I when we saw this slide start at $89 and come down, I think it went down to like $68. And now it's pretty much settled at $71 an ounce. It really exposes where buyers stop stepping in and where sellers have taken control. And here's why that matters, because the buyers did not defend the mid-70s. They failed to get near 72, and by the time silver broke $70 and dipped down under that, the market was really telling us that near-term control, meaning like silver's not dead forever, but in short term, we have really shifted to a new floor. And we really thought the floor, just if you'd asked me 4 days ago, 5 days ago, I would have said the floor was $80. But clearly, we've got a floor of 70 now, which is exciting for those of us who are looking for a buy price. It's exciting for those of us who are really ready to jump in on silver. But I know many silver stackers, and I read the comments, your buy price is closer to 60, maybe even closer to 50, right? Well, I'm not making any predictions here. This live stream is not about telling you, oh, I think silver is going to head to this point or that point. But when we see this national debt just shooting so high, and we see silver really coming to a level which is more within reach than $120 an ounce, I mean, that tells me that we are actually in a great place for silver. Now, at the top of this live stream, I mentioned that no, silver is not dead. This is just a correction. The reason we know silver is not dead, and it's clear that silver is not dead, this drop, this correction, this decrease in price due to profit taking and funds being moved over to treasuries because the interest rates are high for them right now. Silver is not dead, and what we still have is the industrial demand just pushing the need for silver stronger than we've ever seen it. And that is why we know that the long-term value of this metal is going to continue to increase. It's the industrial demand of everything else. When we look at the pattern of silver, it's just short-term hits. It's short-term pressure, interest rates, inflation, energy prices. The history of silver shows us that those are always short-term, but the long-term is the industrial demand. That's what keeps us going. Well, get your own silver. Click that link in the description. Thank you, Money Metals Exchange, for sponsoring this challenge. It's a great contest. Every month they're giving away 20 silver eagles, 20 eagles every month. Click that link. I put a link down below. Be the next winner on that list and take home that silver. Don't miss out. Last month's winner was John S. from Farmers Branch, Texas. The month before that, nobody claimed their prize. Nobody. We were Money Metals. We were sending out emails telling people they won. Nobody was responding to the email. You have one job. The contest is free. It's really shocking to see that people do not open that winning email, but that's what happens. So you have to open that email. All right, I'll see you guys.